Good evening, unit holders of Mapletree Commercial Trust, MCT. Thank you for joining us this evening at this SIAS-MCT virtual information session. On 31st of December 2021, the respective managers of MCT and MNACT jointly announced the proposed merger to create a flagship commercial REIT in Asia. The merger shall be effected through the acquisition by MCT of all the issued and outstanding units of MNACT by way of a trust scheme of arrangement. On 21st of March 2022, Mapletree Commercial Trust revised its bid for MNACT to include a cash-only option for MCT unit holders. The value of the scheme consideration remains unchanged at $1.1949, which is equivalent to the net asset value per MNACT unit for all three options. Now, Mapletree Investment Private Limited, MIPL, the sponsor of MCT and MNACT, has undertaken to subscribe for the maximum preferential offering units of up to 2.2 billion at an issue price of $2.0039 per MCT unit in support of the merger. Based on the market price, we must note, of 1.87 for each MCT unit holders would not subscribe to the preferential offering. The merged entity will have 18 assets across Hong Kong, SAR, China, Japan, and South Korea and Singapore. The portfolio is balanced across sub-asset classes with 21% in business parks, 35% in office, and 44% in retail. The manager is also proposing to adopt the management fee supplement. If approved, the base fee will be 10% of distributable income. Currently, it is 0.25% per annum of the value of deposited property and 25% of the increase in DPU multiplied by the weighted average number of units, currently 4% of net property income. Now, tonight we have invited the senior management of MCT. We have Ms. Sharon Lim, who is the Chief Executive Officer. You all know her very well. You also may know her deputy, Mr. Chua Tiao Chai, who is also joining her in the Q&A session. Well, Sharon, we will kick off the session with Sharon.
Bring stable returns to unit holders. For MNACT, definitely it signifies growth. As you can see that over the years, they have grown beyond the port of IPO set of properties. We had the vision of creating a flagship commercial REIT that provides stability and scale across key gateway markets. Maybe a lot of people are asking, what's the motivation behind us proposing this merger? As you're aware, MCT is Singapore-centric. Singapore has very, very limited transactions, whereby limiting its growth potential. So while we're looking at, took a hard look at MCT's growth trajectory, it was very clear that we can safely conclude that for us to grow the vehicle on a long-term basis, we have to leave Singapore and to look at expansion overseas. So MNACT actually presents us a very interesting opportunity, ready launchpad for us to be able to enter the markets very, very swiftly, because we have a set of very experienced people on the ground, and with very similar SOPs and operating systems where integration asset under management will be over 17 billion, 11 million square feet of space we'll be managing. It will boost very high occupancy rate at 97%, 2.5 years of WALE, and the average gearing is in order about 38.8%. 18 assets across 5 markets. Singapore will still be very core for us at over 50%, followed by Hong Kong at 26%, 2 assets in China for 11%, 9 assets in Japan constituting 10%, and 2% in Hong Kong. In terms of best-in-class asset, made up of Festival Walk, Vivo City, MBC 1, MBC 2, the MPACT will hold 67% of this best-in-class assets. Just some transaction overview. This merger will be effected through the acquisition by MCT of all the units issued and paid up of MNACT, held by MNACT unit holders by way of a trust scheme of arrangement. So MCT has provided 3 options, scrip only, a cash and scrip, and a third, which was announced in March, the cash only option. For the first option, which is the scrip only, for every 1 unit of MNACT unit, you will get 0.5963 units of MCT. The second one, which is a combination of cash and scrip, 84% will be in form of units and 16% will be in form of cash. And the last one being full cash of the total being the same at 1.1949. I think what you can notice here is across the different options, the total scheme consideration remains at 1.949. Okay. So the pref offer, so how did this pref offer come about? The option, the third option, which is a cash only option, we had actually garnered the support of the sponsor in terms of coming up with an undertaking to take up all the pref offering to put 2.2 billion. So if you notice that at a full cash option, MCT had to come up with $2.2 billion additional. It does not have the cash ability. So that's where the sponsor is coming in terms of underwriting it. Okay, the issue price will remain the same at $2.0039 per unit. The total number of units issued for this pref offer is over 1 billion to raise a total proceeds of up to 2.2 billion. Some details of the pref offer, application period, we're talking about end July to early August. There will be a voluntary lockup by the sponsor for 6 months for all its units in MCT. Okay, the new entity will be renamed to MPACT, in short, Mapletree Pan Asia Commercial Trust. Its mandate will be to invest in a diversified portfolio of income-producing real estate, primarily used for office and or retail purposes. We also take the opportunity to expand the geographical scope in the mandate, where it will include key gateway markets of Asia, including but not limited to Singapore, China, Hong Kong, Japan, and Korea. On the right-hand side is just the holding structure of MPACT, where MNACT will be a sub-trust of MPACT. So in terms of commitment, we still see very strong conviction and commitment from the sponsor on a few fronts. First is its 2.2 billion underwriting for the pref offer units. Second, the sponsor will continue to take up 100% scrip only consideration, and that remains the same as what we have announced from January until now. They will only take up the scrip option. They have also volunteered a 6-month lockup period for all its unit holdings in MCT. Through the manager, the sponsor has also shown support by waiving the acquisition fee pertaining to this transaction. And lastly, we also got the support of the sponsor to change the management fee of MPACT to be more aligned to unit holders, pegging it, the performance fee component, to a change in DPU in the calculation of the performance fee. So some background of the sponsor. This is a sponsor that we can actually tap on in terms of experience on the ground. It currently manages over 60 billion of assets. It has over 2,500 employees and has a reach of 13 markets. So the fourth resolution that we're tabled, which is the change in the management fee. Some background. Original MCT fees is based on the base fee being 0.25 of total asset and performance fee at 4% of net property income. So what are we proposing to change to is 10% on distributor income and 25% on year growth. The number numerically may look bigger, but let me put it into perspective for you. For this transaction, based on MCT fees, the total fees payable based on base and performance fee will be in order about 0.42% of total asset value. If we will apply the new fee structure that we are proposing, which is the 10% on DI and 25% on year-on-year growth on DPU, that fee comes down to 0.35%. And this is in spite of us doing a very accretive deal of between 4 to 7%. So what's the key rationale for this deal and benefits? We have mentioned before, it will be a proxy to key gateway markets, enhanced diversification, will be within the top 10 REITs, better platform to unlock upside potential, and attractive financial returns. I'll do a little bit more in further slides. Okay, so 18 properties across 5 key markets, $17 billion. Singapore will still be a very, very core and stable piece for us with 5 assets and over 52%, followed by Hong Kong, 26%, which is predominantly 1 asset, Festival Walk, and China, 2 assets, 1 in Beijing, 1 in Shanghai, and South Korea, 1 asset, and the last being Japan with 9 assets constituting about 10% of the entire pot. So we are able to see benefits in terms of combining operational capabilities and expertise to enhance further growth. As you can see that we're putting 2 very credible REITs together with very good track record. In terms of AUM, NAV, DPU, MCT has shown very positive CAGR growth of 11%, about 6%, and 5% for DPU year on year. So MCT has proven itself to be a very responsible steward of capital. Similarly for MNACT, be it on the AUM, NAV, DPU perspective, they have also grown positively. Further, they have also demonstrated its capabilities to grow and to expand. As you can see, they've added Japan and Korea into their initial pot of IPO set of properties. So what is attractive about MNACT? MNACT actually presents itself as a ready launchpad for MCT. It has an established network of strong local experience, good track record in terms of investment and asset management. So we are able to tap on MNACT's current platform to gain access very swiftly into the key markets, as opposed to MCT by individual assets by itself. It will take longer and there will be higher transactional costs. So what would you like about Asia? For growth, I think what we believe is Asia is the place to be. It's got deep liquidity. And the markets that we're going into, we're tapping into one of the largest and most established real estate market in Asia. We do see continued growth opportunities where offices will play an integral role. So some details of the market. Singapore, I think you'll be very, very aware. Retail is expected to gradually return to pre-COVID levels by end of this year, 23. In tandem with the easing restrictions. I think we do see very positive signs even from VivoCity. For the last quarter of last year, we do see sales already surpassing pre-COVID levels. Similarly for business park, it's supposed to be still conducive, where good quality decentralized office and business parks are expected to remain resilient. Hong Kong retail, sentiments are expected to improve and get a pace once cross-border travel resumes. Office demand is also expected to be resilient in the Hong Kong side. For China, we have two assets, one in Beijing. Recovery is expected in early 23 for our Beijing for Beijing side. For the business park at the Shanghai, we do see growing IT and biomedical sectors where demand is expected to outstrip supply and drive rental growth. Offices in Japan is expected to be resilient and definitely due to the differences in terms of the rental costs of decentralized office and those in the CBD. Korea itself, definitely lack of supply and good demand in that area. So diversification is also a positive for the portfolio when merged. You can see there will be lesser reliance on any single asset, any single country, any single tenant. In terms of the top 10, there is a clear improvement. So there's a lesser reliance on the top 10 after the merger. Occupancy-wise, very high, both for MNACT and MCT, both over 90% at 97.2 for the merged entity. WALE is healthy at about 2.5 years. So we do see that the vehicle, once merged, will leapfrog into within the top 10 of the Asian REIT universe. And this REIT itself, MPACT, will have actually one of the broadest Asian mandate. In terms of liquidity, currently MCT is about 4.5 billion in terms of free float. So depending on the option selected by MNACT unit holders, whether it's scrip, a portion of scrip and cash or cash only, the free float component can potentially increase from, will be improved beyond 4.5 billion. So that funding capacity-wise, with a bigger balance sheet, we have more flexibility to pursue more growth opportunities. Before we hit the MAS maximum threshold, we still have ammunition of 3.9 billion on a merged basis of the debt headroom. In terms of AEI, we have in order about 1.7 billion of debt headroom. Financial returns, this is looking at the pro forma of MCT, adding the pro forma of adding MNACT itself. MCT last year, we have registered 9.53 cents. That's expected to increase on a pro forma basis by about 7%. Similarly, on an NAV basis, there will be accretion on around 7%. So post-merger, what are we expecting to do? Quite clearly, we're looking at sweating the assets. We have crafted a very simple 4R strategy, recharging. We're talking about refocusing and reconstituting the asset, and of course, backed up by resilience, which is our capital management strategy. So we look at driving the MPI and DPU growth through cross-pollination of teams and active asset management. And also looking at selective strategic divestment at opportune time and rediverting or reinvesting into office-like business parks in key gateway cities. For Singapore, Singapore will still be very key for us, will still be our core piece to provide stability. Hong Kong for us, Festival Walk, some history. I think for the last 2-3 years, they have gone through some challenging times from social issues to COVID. So it's definitely on a path for recovery. And looking at the way the government is relaxing the safe distancing measures and the opening of borders, those are very huge pluses for Hong Kong itself. For China, we are looking at maintaining our high occupancy and focusing more on office and office-like business parks. So what we like about office and office-like business park, just to draw some analogy, we really like properties like MBC, where it looks like an office, but it's truly not an office. It's actually more a business park. Those are the type of assets we like because there's rental advantage from the tenant's perspective, and valuations are very reasonable. Then we look at Japan. Japan for MPACT is 9 assets, 10%. It's not a very significant component. It's more an interest rate tool for us, where there's a nice spread and there's an ability for us to gain some positive from hedging with hedging the asset. So over time, we will look at rebalancing. Rebalance could come from divestment or adding other countries where the percentage may be a little bit lower than before. So for South Korea, we do like South Korea for its market dynamics in terms of the supply, in terms of the rental structure step-ups and all. So we hope to go more there. Okay. So in terms of ESG, in simple forms, we do incorporate wider ESG issues into our policies and business strategies. We'll have continued participation in GRESB, and we will be publishing the report in 2022 this year. Okay, so as a summary, there are four approvals for unit holders yourself to think about. One is the merger. 2 is also pertaining to a merger, but is regards to issuance of units. As you know that we will be issuing units in order to complete the transaction. Number 3 is pertaining to the whitewash, and 4 is pertaining to the change in the fee structure. Okay, so we have also sought opinions from IFA. They have already issued their opinion, which is part of the circular. They have viewed that the transaction is fairly valued under normal commercial terms, not prejudicial to MCT or minority unit holders. So they have already cast their opinion that is fair and reasonable, and they have recommended to vote in favor of the resolutions. So with that IFA's opinion in mind, the IDs, the independent directors, have also recommended to vote in favor of the 4 resolutions. So timeline, quick takeaway. Today is a start of a further engagement with our unit holders. And if you still do have further questions, feel free to drop us a line, and then we'll definitely answer all your queries. EGM is targeted for 23rd of May. The effective date is if resolutions are passed, we are looking at taking over around early August. Okay. So with that, I thank you for tuning in, and we'll be more than happy to address some of your queries.
Thank you, Sharon. You know, some investors are still a bit jittery about you going overseas as you're wanting to go more. They still think that Singapore is where you are comfortable and they are comfortable. This is not the majority, but this is some, for the benefit of some shareholders who feel that your investments should be largely in Singapore. So here's a question from one of the unit holders. Sponsor Mapletree Investments hold other Singapore assets. Can MCT acquire those assets instead of instead of diversifying overseas? There is unjustifiable need to expand overseas at the moment. This is a minority, I know, but we need to help them understand why you're going overseas. You have said that Singapore is still going to be a central theme.
Yes, thank you for your question, Mr. Gerald. I think maybe we take a step back as to what was the true motivation, which I articulated earlier. If you look at MCT itself, it's Singapore-centric. How many transactions are there? Reasonable transactions for unit holders that is accretive. Very, very limited. I think if you look at the past few years, there's nominal transactions being done. So with that as the backdrop, I mean, MCT assets are solid. MCT is doing very well, very stable. But we have always been getting a lot of calls from investors as to where does our growth potential come from. We can't be running MCT along this manner. without any growth trajectory. So when we evaluated, looking at the market in Singapore, the number of transactions are very, very limited. So that's where we can actually safely conclude that we actually don't have a choice. Singapore market is just way too small, and we have to look at long-term growth of MCT, whereby we got no choice. We have to consider moving overseas to expand for long-term purposes. In terms of buying from Singapore assets from the sponsor, we still have a ROFR. We will still continue to be interested in a ROFR as and when the sponsor is ready to divest. So that is still in the pot. We are currently 8 over billion. Okay, so we have to keep charting, looking at the long-term prospects of MCT. We are not managing the REIT on a short term, where we only look at the horizon of 1 year. Currently, yes, there's a lot of, there may be some issues overseas where people say that, hey, it may be choppy water outside. Singapore seems to be a safe harbor. I don't deny that. But as like what we said, there isn't a perfect time or a perfect portfolio. We have evaluated, we find that this is a very good match in terms of mandate, a very good match in terms of ready platform for us to be able to tap on, and a very decent assets. And it actually drives us into a new area of potential growth for MCT.
Yeah. So with these overseas acquisitions, yes, sorry.
Sorry,
yes.
David,
Yes,
can I just add a couple of comments? I think, well, I'm speaking on behalf of the sponsor.
Yes.
Okay, the long and short answer to the pipeline or the ROFR is that actually the sponsor doesn't have immediate pipelines that is going to be available within the next months or the next couple of years, because a lot of our assets are due for redevelopment along the southern waterfront. So when we have done that, obviously we will have a ROFR offer over the MCT. So that part of it means that actually the so-called limits to growth in Singapore is going to be there. And if you trace back towards the performance of MCT price over the years, the main picking of or the main jumps in terms of the share price or the unit price has been whenever there is a purchase or acquisition of the sponsor's assets into the trust. And if you look at it, there are 2 or 3 distinct actions. And that, without an acquisition pipeline, you will find that it's very difficult for MCT to re-rate and bring the unit price up. And I think for that, that's why as a sponsor, we are fully committed and fully behind the proposed merger, whereby Sharon and her team can bring this particular platform into a growth kind of trajectory.
Understand. Acquisition is necessary from your point of view, but would the acquisition significantly alter the REIT's risk profile? Do you think this is what your unit holders want? Yes, Sharon.
Hi, sorry for the technical.
Yeah.
I think moving out of Singapore, which you have said that today it appears to be very safe harbor, it's only natural that people do feel a little bit uneasy, okay? Because we have always been operated in nowhere else but Singapore. Very safe, very stable, and typically deliver, okay? So if we really take the long-term view that we need to expand to grow this vehicle, and it's inevitable for us to move overseas, it's only natural that we have to experience and take on a little bit of a change of a risk profile. So that's one part. But do you get rewarded immediately? I think if you look at the financials, pro forma basis for MCT using last year's number, adding MNACT's number, on a pro forma basis, there's immediate financials positives in order of about plus 7%. So I don't deny there's a little bit of discomfort, but in terms of financials, I think it speaks for itself.
Yeah, I tell you where the fear is coming from, the basis for that question, those, fear. With rising interest rates, continuous lockdowns in Hong Kong and China, due to their zero COVID policy and the Russian-Ukraine war. Shareholders are getting a bit nervous whether this is the appropriate time to leave the safe harbors of Singapore and acquire huge assets in Hong Kong, China, etc. Over to you.
Okay, I think we do acknowledge there's uncertainties, and these uncertainties, be it driven by COVID or a result of geopolitical tensions, will continue to exist. Okay, whether we're in Singapore or overseas, it will continue to exist, and we take a view that there's actually no perfect time or no perfect portfolio that we can acquire. So we put our hat on as a professional manager. Are there challenges? There will always be challenges in whatever we do. Whatever properties that we buy is never beautiful. You know, when it's beautiful and no issues, it means you're going to pay a very, very high price for it. Okay, that's it. That's in short. We take a very, very balanced view. Familiarity in the market, experienced people on the ground, ready platform, decent assets. Yes, a little bit bumpy today, but if you take a long-term view and you look at the countries they're in, definitely it's more positive than negative. Hence, we remain very committed that it's actually good for MCT on this.
Cheaper now than later. Cheaper now than later.
There is no. I would say the concept I would take is it's a fair price. Yeah.
Fair price.
Yeah, it's a fair price. I think we are both very credible and very professionals. Nothing comes cheap. Everything comes fair. Nothing comes expensive. It has to be a fair deal for both parties. We have two REITs with separate unit holders, so the deal has to be fair. So the deal was extensively negotiated. We looked at an array of factors before coming to conclude that a one-time book is an intrinsic value of it. We look at the share trading prices over a period of time. We look at the NAV. We look at what past precedents, what people have done, how much people have paid, and we also look at the capital structure of the merged entity MPACT going forward. So these are all the considerations that led us to a view that one-time book at 1.19 cents is actually the intrinsic value. And this is definitely supported by a third party, the valuations, which are done by independent valuers. The 805 auditors also had a look at it. And also the IFA also opine on it. And that's where we find that deals are, the deal matrix, which is the 1.19 book, is a fair number. Another
concern, Sharon, is the leverage. The leverage will increase from 33.5% to 38.8%, and the shareholder is asking, and the REIT will issue 200 million in perpetual securities. Similarly, is this the right time, therefore, because of this, to increase leverage given that interest rates are expected to rise?
Okay, the rising interest rate environment, it doesn't just impact MCT. I think it's across the board. I think the question we have to ask ourselves is, are we comfortable at the 38%, 39% level? We have been operating at very conservatively about 33%. Okay, are we very comfortable? Yes. MAS guidelines or threshold is at 50%. And even at 38.9, we still have a debt headroom of 3.9 billion that we can actually activate in terms of as an acquisition ammunition. Yeah. So are we comfortable? Yes, we are. The other question that we have to ask ourselves is, at this level, will we have problems in terms of access to refinancing? I think the question is very easily answered. We do have an array of different diversified funding sources, and refinancing typically with a strong sponsor name typically will be more positive. So we are very, very comfortable. A bet that is actually increasing from 33 to 35. We also have received different views that at 33, could it be a very lazy balance sheet, that you're not activating your debt to increase the distribution to unit holders? So those are different views that we got. But overall, I think when we look at the manager, Are we comfortable at 39? Are we straining the vehicle at 39? I would say no. We still have that headroom, and we are still well below the MAS guidelines.
Good, good. MIPL is undertaking the 2.2 billion preferential offering, which has an issue price of, as you said, 2.0039.
0039.
Yeah. Some unit holders feel that the sponsor is privatizing MNACT by injecting all the assets into MCT, and in return will be paid in preferential offering units. So the question they ask is, do you think that MCT is acquiring the assets at a bargain?
I think I kind of answered it just now, that the same answer, there's no bargain. Highly extensively negotiated. It's a fair deal. We look at the array of factors, the trading prices, the NAV, trade historical. We look at past precedents. We look at the capital structure of it moving forward before we decided that 1.19 is a very fair number. Okay, so it's not a bargain. Okay, it's a negotiated deal. And this 1.19 is well supported by third-party valuation, IFA opinion, and also the 805 audit opinion.
Yes.
Yeah.
In fact, now you have received the recommendation from ISS to say vote in favor.
Right.
Asking the.
That's right. So. Yeah, so we have received, ISS has issued its opinion. It's the independent proxy advisor that has issued positive opinion to vote in favor. Yeah.
What has influenced them to say so? What's the dominant factor?
They are independent, so no influence,
yes.
I would say.
Yes.
Influence at
well,
all, yeah.
Yes, we are not proxy advisors, so we don't give opinions, but we, facilitate. Okay, let's come to Festival Walk, which yesterday too there was a lot of concern about that. Performance of Festival Walk. MNACT's largest asset, Festival Walk, is currently valued at Hong Kong dollar 25.57 billion or 4.46 billion Singapore as at 31st March 2022, or 54% of MNACT's total portfolio. In financial year 21-22 and financial year 2021, MNACT recognized revaluation losses of 133.3 million and 428.7 million respectively. Now, MNACT had to reinitiate a new round of rental reliefs after the Hong Kong government introduced unprecedented restrictions on social activities due to the Omicron wave. The total rental reliefs granted in financial year 21-22 was 14.7 million. Not only that, they point out that the average rental reversion for the retail component of Festival Walk for financial year 21-22 was a negative 27%. It was negative 21% in 2021. Festival Walk will account for 26% of the portfolio of MPACT should the merger go through. So the question they want me to put to you is, how significant is the risk that Festival Walk will continue to underperform relative to the stable MCT assets in Singapore? Are there operational and financial challenges of Festival Walk underestimated? There is in fact a follow-up question from a unit holder on this. Let me also read that to you. NPV of Festival Walk using 160 million net present income over 26 years, remaining lease with 12% rental upward adjustment and 5% discount amount to 2850 million. Valuation of FW is 4.5 billion. Can I know the basis to justify 4.5 billion as well? So I'm sorry, there are 3 or 4 questions here.
Okay, I will take the later last question first. Okay, I think the methodology that you're talking about, MPV basis, this asset is not valued on an MPV basis. It's valued on a capitalization and discount DCF methodology, which is done by the independent valuers. So it's not that after 26 years it's supposed to disappear and there is no more property that you own. Okay. Under the DCF method, the DCF method, we are talking about a 7% discount rate that was used. In terms of the cap rate, okay, the cap rate that was applied was about 4.15 on gross basis, and that is actually pretty much in line with most of the transactions available, past transactions in Hong Kong. So I think I need to just adjust the thinking behind that question. MPV means after that zero. Okay, it's not going to be zero. It's a cap rate method. It's a DCF method that's applied in the DCF. So you may actually ask, like, okay, land lease only 26. What happens after 26 years? I think there's a lot of investors who are concerned. That's why they think that MPV after 26 years, no more asset left. I think in Hong Kong, there's a big chunk of leases due in 2047. Based on the current policies, there has been precedence of renewal at nominal annual rent basis, and we are in no circumstances to think that there will be a non-renewal for Festival Walk. And that same basis has been applied through in the valuation of Festival Walk, where local market people also view the renewal is actually part and parcel. It's already part of policy, and renewal will likely be automatic. So that's where valuations are based on a freehold basis. Yeah. So I hope I answered the last question.
Last question. Yes, we've got to move on to another question from unit holder on dilution, possible dilution. Since the current traded price of MCT is lower than the preferential offering price of 2.0039, existing shareholders would most likely not be subscribing. What would be the dilution, if any, to these existing MCT shareholders after the preferential offering?
Okay. If we go back to the two options that we originally offered, the third option, what's behind these numbers for the option 1 and 2 is issue price of $2.39 and a total consideration of 1.19, which is one-time book of MNACT. We added the third option. The third option, which is a full cash, which is backed up by the preferential offering, doesn't change the matrix for MCT at all. Okay? Why do I say that? Now, the total number of units that we need to issue to complete the merger remains the same. It's now, rather than going into the hands of MNACT unit holders as in the cash and scrip option, it now has a third option, which is under the pref. If nobody takes up like what you say, it will go into the hands of the sponsor. So overall, there's no dilution from the original intent of option 1 and 2. Okay? Technically, if you look at the improvement in terms of the accretion, there is an accretive deal on a DPU and NAV basis. Okay? So I hope I answered the question. First, very clearly, option 1, 2, 3, the total number issued of 2 and 3 is the same. It's just who holds the units.
Can management please share, asks another unit holder, the land lease expiry of combined portfolio? What happens when leases expire, especially overseas, example, Hong Kong and China?
Okay, I think Hong Kong, we talked about, there's a certain policy of renewal. China is in order of about 50 years. We still have a relatively long lease over there, about 30-ish, 40-ish lease. Singapore, I think it's even longer. I think we still have about 70 years. Okay, so I think it's a little bit premature to think about it. And typically, what we would love to do for all these leasehold holdings is to get big enough where a recycling of assets that fall away with a lower lease term will have lesser impact. Okay, so you have to move to that level where when there's a switch out, the impact to unit holders will be lesser. Okay, but in terms of the assets that we are holding, is still a decent level. Singapore, about 70 years, and Hong Kong, although it looks like it's a short, but there is precedence and there's certain policies with regards to renewal.
Sharon, your independent directors, your IFL report, your ISS recommendation must be heightened your optimism. You must be very optimistic about the success of this deal.
I think as professional managers, we can only put on our hat, think about it, put ourselves in unit holders' position. You know, we are actually steward of capital. At the end of the day, we just have to manage people's fund in the best of our ability.
And you're confident that the growth will take place, and you're confident there will be better distribution level of DPU.
Based on a pro forma basis, I think it's the numbers are showing. If we do nothing and if we do something, it's a +7 on a NAV and DPU basis on a pro forma historical pro forma basis.
Yes. What happened in event? I mean, this is unlikely, highly, but in the event that one unit holder is asking, in the event that this deal did not go through, what is MCT's plan going forward?
MCT's plan, I'll go back to my original chair, enjoy my very stable, and I won't have very much deals to look at. So I think if we don't have...
remain what you are now.
So it's back to our portfolio.
Some are getting, I think here is a unit holder, which few others have said, Hong Kong is going to get a new leader, and we do not know where Hong Kong economy will be heading, really. He's a security man, right? Hong Kong economy has swung into recession with little hope of recovery in immediate future. What's the rationale for still choosing Hong Kong? See, there are some...
I think first step first is when we look at it, we look at a whole platform. We don't cherry pick. Okay, there are some issues that certain properties may be facing, but we are very clear that Festival Walk has been there, done that before social issues, before COVID. It is a very highly regarded mall in Hong Kong. Actually, there's a lot of similarities with VivoCity. In terms of the tenancy, in terms of the size, in terms of its attractiveness, and in terms of its connectivity.
So is Festival Walk
I would say it's a very high...
Is Festival Walk underestimated?
Sorry?
Is Festival Walk therefore underestimated?
So Festival Walk has suffered gone through some challenges over 2-3 years. So for us, we have put Festival Walk in a pot where it says recovery. Okay, so that's where we are looking at sweating asset, drive the MPA and DPU. I think you have seen negative reversion, okay, but you have seen that the negative reversions are narrowing. Okay, so that's a good sign. Then with the slew of loosening safe distancing measures, it's a very huge plus. Okay, so dining can now happen at 8 rather than previously more restrictive. There are more openings of be it the hair salon, be it a cinema and all. All these are very positive, and I think we can see from the experience of running VivoCity when Singapore clamped down very tightly, and after when Singapore released or loosened the safe distancing measures, there was a pop in terms of the sales number. So like for VivoCity, after the relaxation of 4th Q, our sales were already ahead of pre-COVID levels. So those are very positive signs. So Hong Kong is slowly moving into that. Okay, so we are cautiously optimistic with regards to Hong Kong, but there are signs of positive recovery for us, in our view.
Maybe can I add a bit on the Festival Walk, since there's so much attention?
Yes.
Well, we bought Festival Walk under the sponsor many years ago, and the reason we bought Festival Walk from the Swire Group is that at that point in time, and if we trace back the history of Festival Walk and until today, except for the period which is disrupted by the social unrest, followed by the COVID subsequently, it has been growing from strength to strength, both in terms of occupancy, rates, valuation, whatever measures or metrics that you want to use. So unfortunately, the biggest hit that we had in Festival Walk was not COVID, right? It was the social unrest. And for whether you like it or not, given the current government regime in Hong Kong, you are unlikely to see those disruptions that came in and hit us now 2-3 years ago. And if you look at the COVID recovery now, it depends on whether you want to see half a glass open, full or empty. We rather look at it from the angle that it has hit a situation from the bottom trough, and there will be the increasing recovery play that Sharon is talking about. So we are a lot more optimistic as a sponsor, all right, in terms of the festival walk, because I think we have seen it through his infancy to his toddler stage to his teenagers, and I think it's time for it to grow up now from here on.
So you think the unrest is under the carpet soon?
We don't think there will be any more unrest as what we have witnessed 2-3 years ago in Hong Kong anymore.
Okay, so just another point that unit holder raises is net property income of Festival Walk for 21 to 22 was 153.8 million. The valuation of Festival Walk is 4.46 billion or 29 times the NPI. With just 25 years of land lease remaining, is the 4.46 billion valuation of Festival Walk supported by fundamentals?
Okay, I think this was a question that was asked just about a few minutes ago. Same answer. Yeah, it's the same question. So just to recap, the property is not valued on an NAV basis, where there's no more property left in 26 years. So it's valued on the basis of a cap rate method and a discount rate method. Yeah.
So should the merger succeed, and all optimism there, I can see, which country will MPACT focus on for future acquisitions from sponsor?
From the sponsor, quite clearly, what's that we are within reach and comfortable is definitely Singapore. Okay. For MPACT, immediately, very clearly, is more the recovery story for Hong Kong, and a little bit of reconstitution in the immediate term. Singapore, we will still be very, very keen on, be it from the sponsor or be it from third party. Yeah.
I think you covered this, but what does a sponsor, MIPL, plan to do with the stake in MPACT?
Okay, maybe I'll take that, David. Well, firstly, by putting a $2.2 billion check, it shows the sponsor's confidence and conviction of the strategy that the team has put together. And I think we are not looking at today or tomorrow, but it is definitely not an altruistic move, because we're also looking for financial payback. And we believe that, given this current yield and then the potential growth of the enlarged entity, we will get our money back sooner than later. And then on that basis, there is no intention for us as sponsor to dispose of our shareholding in the near term. That's why we actually offered voluntarily the 6 months lockup. And I think there's no intention even beyond that to dilute our stake. And we are looking at this as a sponsor stake for the MPACT to return us our dividend in terms of the passing yield, as well as the growth in terms of the acquisition growth from that extent. So I think investors can rest assured that there is no risk of MIPL dumping stocks into the market post the completion of the merger.
That should be assuring, Teo Chai. But how resilience is, now we're having this hybrid model of working from home, and some going to office, some not going to office, some not willing to go to office anymore. So how resilient is the office business park properties demand given the trend for hybrid work model post-pandemic? Example, some banks, DBS and Standard Chartered have cut office spaces.
Okay, I think the this cutting back of space requirement can be looked at it in a different angle. Yes, there'll be some companies that will be adopting some work from home, but based on our dealings with all our business park tenants, even like Google, there's no intention of cutting back the total amount of space that they have with us. They have already renewed all their leases for another further 5 years, so that's no issue at all. If you look at what COVID has brought about, it's the design of the offices. We used to have very close, very compact offices where you reach out your hand, you will be able to hit your neighbor type, yeah. So with current COVID situation and the knowledge of distancing between parties, the layout of offices needs to be rethought about. Whereby there are more spaces that's required between individuals. So that's where the per square meter per person in the design on an office will also increase. So that technically a little bit balances out the work from home coupled with the redesign of the office looking into the future. Okay, so how much work from home adoption we have in the tenants that we deal with? I think most of them, there is a part of it, but they're still keeping their offices and not like adopting 100% work from home scenario.
I see. Okay, that's quite an optimistic view. Here we come back to Mr. Chua Tiao Chai, unit holder is addressing this question to you, has said in past years, MCT share prices jump whenever MCT acquires assets from sponsor. So why not the sponsor take over MNACT assets and then slowly inject into MCT piecewise? With price jumps for every injection of each new asset, wouldn't that be more beneficial for MCT share price and shareholders?
Okay, I think, thanks for the question. I think that's an interesting one. Firstly, let me say that there was never any intention to privatize MNACT, right? Yep. This whole process started with MCT and his board deciding that they have to go overseas because of limitation of growth in Singapore, and they approach and MNACT for their concurrence to do a scheme to merge the two entities together. Insofar as where the sponsor came in was pretty late in the game when MCT decided to offer under request from MNACT a all cash kind of offer. And I think MCT approached us as sponsor to see whether we could help out in any way. So as sponsor, we gladly supported the thing because as I mentioned earlier, we truly believe in the growth story. And above that, we decided that, okay, to make all things equal, as Sharon has mentioned, we will take up the pref offering at 2.003, which in a normal circumstances, if you put an offering out there on a pref basis, you would expect a discount. So on that basis, it shows our full conviction as well as support for the deal. But I think the suggestion that why don't we privatize MNACT and then sell bit by bit to this MCT, that one will create a lot of issues in terms of double handling. There's going to be a lot of costs involved in terms of firstly taking it down in terms of acquisition or divestment costs, and then later on MCT will suffer quite a lot of a long tail because investors will know that eventually they will start buying bit by bit by bit. And there is going to be an overhang in terms of MCT share price if that happens over a long period of time. And given that if MCT believes, and we support their belief, that this will help them grow with a single transactions, then my question back to the investor is why not do it at one big bang and get it over and done with? We suffer a bit maybe in the short term, but in the medium term, I think we will more than rewarded back with the performance of the enlarged entity.
I see. Okay. That's not financially viable, not practical. That's your two-word answer, right? So, what does you did mention about management reconstruction? What does management mean by reconstitution if merger succeeds? It's got something to do with your 4R strategy.
Okay, reconstitution, we're talking about rejigging the portfolio, i.e. maybe recycling some of it, selling some in short, redeploying the capital into higher yielding. So in short, reconstitute could mean selling and rebuying. So that's where we reconstitute the portfolio.
Okay. So how difficult it was for MCT, or will it be difficult for MCT to find growth without merger or acquisition of MPACT?
Quite clearly, I think it.
Yeah.
Sorry, go ahead.
No, it's okay. Carry on. That's it. Yeah.
I think based on experience, we are on the ground searching for deals, accretive deals. You can see for the last 1-2 years, I can count with a number of fingers on my hand in terms of local deals that we fully analyzed, very far and few. I think there's no notable or even sizable or even potentially accretive deals for MCT in the Singapore market. So that is actually the general background of the limitations in terms of growth stemming from the limitations of the assets available, as because Singapore is in terms of retail, of course, it's a very tightly held class of assets. You also don't see a lot of change of hands in terms of liquidity, transaction volumes. So that is our true limitations. And last year, I can count the number of deals that we analyzed in Singapore.
Right. Some are concerned about MCT share price, and they are shooting this question. MCT share price has dropped since the proposed acquisition was announced. How do you see this being value accretive to MCT unit holders? Furthermore, the preference issuing price of 2.0039 is much higher than the current unit price. At this level, it would not be attractive for unit holders to take up this offering. What's your response?
Okay, I think very clearly that $2 is higher than our current trading price. Okay, I would say that if this condition happens, I don't see unit holders taking out the pref. That's okay, because it's fully underwritten by the sponsor. They're happy to be issued MCT units at $2.0039. So there's no impact to the REIT. It's actually a ability for us to use that cash to be able to offer an alternative option to MNACT unit holders to give them more flexibility. They can choose units, they can use units and cash, or they can choose the cash only. So no impact to the unit holders. They are not worse off from the two options that we originally envisaged. Okay. Now, how is it value accretive? I think back to the accretion slide. We were talking about 9.53 today on a pro forma basis. Adding MNACT's historical is a +7%. NAV is a +7%. So that is the value creation from this deal that we are putting forth to the unit holders. I don't deny there was some drop in the share price at the start. Quite clearly, the industry was also facing with some interest rate pressures, jittery, people getting jittery over interest rate, people getting jittery a little bit on the inflationary pressures. But that is not faced by MCT alone. It's the entire industry. But back to this deal, I would say that financially, you can see the positive NAV accretion, DPU accretion on a pro forma basis. So the pref offer has got no impact. So if unit holders do not want to take up the pref offer, it's okay. There's no impact because your unit just goes to the sponsor at $2.0039, which is actually a positive. Okay, because if I were to issue it today at current price, we're talking about $1.80 plus versus at $2. So he's actually putting a lot of conviction with 2.2 billion and taking the units at higher than current trading prices. Okay, So there's nothing that is actually not beneficial to MCT unit holders. So if you don't want the pref offer, it's okay. Doesn't hurt MCT or your the deal.
Having said that, we now as sponsor, we will welcome anybody who wants to come along with us to take up part of the pref offering.
Sure, it's a good call. There will be a shake-up, isn't it, in the board? There may be a new board, or there may be same with others. You can't say as CEO whether who will be on the board, but they're just asking who are the proposed board of directors for the new manager. MPACT. It's not been announced, and are you going to announce?
Yes, it will be announced after the EGM. I don't think we want to preempt the EGM. I think you take comfort from the spread of expertise of all the directors that we have on board. It's always a good mix, a good depth of experience in terms of the formation of the board. So they're not named yet. We don't want to preempt the results of EGM.
Some will come from MCT.
Potentially.
But Sharon, you will remain the CEO.
Yes, it's been announced, yes.
Under the constitution strategy, which assets have been identified for divestment?
Okay, I think it's a bit premature to name individual assets. But I think as a matter of strategy, in terms of reconstitution, I think I talk about rebalancing of Japan. Japan itself, if you look at it, is about 10% with 9 assets for the entire portfolio. We'll look at maybe a bit of lightening in that area, be it adding more assets in other areas and reducing, or selective divestment. Yeah.
So will the fee that is going to be paid to the manager of MCT be lower or higher, or will it be the same?
It's actually lower. If you go back to the slide, what we did was to make it clearer, because a lot of people are caught off guard, like they see visual numbers, 0.25 is smaller number than a 10%. 4% looks like it's a smaller number than 25, but it's actually tagged to different lines, okay? So the main aim is actually to tag to distribution and the growth in distribution, which what matters most to MCT unit holders, which is what they receive in the pocket. So that's the fee. The fee is tagged to that. Now, if I were to translate MCT fees into the structure, you can see that MCT fees is in order of about 0.42% of AUM. Now, if I use a new fee, we're talking about 0.3536. So it's already a lower fee. Now, how can we surpass MCTO fees? It will be a very tough call. It means year on year, I have to grow. Even with today's accretive yield of 7%, we are even nowhere near MCTO fees. Okay, so you have to ask yourself, is it bodily even possible to every year grow at the same rate and of what such a accretive deal that we are putting on the table? So the main intention, very clearly for this, is full alignment and to drive the manager to look at DPU growth before they're compensated for performance fee.
Okay, thank you for that. I agree with Mr. Gerald that we are losing confidence in Hong Kong market, but have you explored Australia? Okay,
at the moment, I would say that Australia is not within our purview for the immediate term, but we will never rule out Australia. So we are set on mind on this platform, Asia first, and that's why we call ourselves MPACT, not Asia Pac. Yeah.
Okay. We have a lot more questions. In the event that we do not have time, I want to tell unit holders you could continue writing in to
definitely
MCT, and Sharon will be happy to, her team will be happy to answer your questions. But
more than happy.
Yes.
More than happy. I think our IR is available. Feel free to drop us a line.
So
I think the lines are open.
Perhaps we can take a few more if you don't. Are you tired, Sharon?
Sure. I'm very happy to do so.
Yes. Teo Chai, you're okay, right? So
yes, I'm fine.
After the proposed merger, the new entity MPACT will have significantly higher gearing than MCT before the merger. What are we talked about gearing before, but what are the substantial plans in place to reduce his gearing, if any?
Okay, I think back to my old answer, we don't have to actively bring it down because we still have a residual a huge debt headroom. We are not close to MAS maximum threshold that we have to actively bring it down. And we are still very comfortable in terms of the gearing levels from 33 to 38, 39. So 38, 39 is way below the MAS 50% guideline. That's where we still have a 3.9 billion of ammunition for us to activate if we do see accretive deals on the table. Okay, so we don't see the need to actively bring it down. But if we were to do what we say we will do and perform positively, technically the valuations should also be positive. So that's where, with the increase in VAL, there can be a potential drop, lowering of the gearing itself. Yeah.
Mm. I think there are some unit holders who feel that MCT is not in an advantage position as MNACT in terms of gain. So the question is, can the manager help to explain why MCT unit holders have to make up for MNACT unit holders' gain? Question mark.
Okay, I don't think we have transferred our gains to MNCT. I think what they present to us is a decent portfolio with a ready platform, which MCT, from my view, actually we value a lot. Okay, good assets and a platform do not come about every other day. Okay, and with similar mandate, decent assets, I think we'll put a fair deal on the table. And I think the sponsors conviction in helping in terms of giving the $2.2 billion in terms of pref undertaking is a very positive to MNACT unit holders because it's full in cash. MCT alone wouldn't have been able to do that because we can't, I don't see ourselves able to raise another further 2.2 billion to fund the full cash option. So technically they have gained from that perspective, of course, together with the help of a sponsor. But at the end of the day, what does MCT gain? MCT is looking at a very accretive deal, looking at potential growth, looking at the long-term sustainability of MCT.
Okay.
And that's where MNACT properties can provide. Yeah.
Yeah, I think you covered what is the overall strategy of combined REIT, right?
Yes, I did.
And you were specific as to which geographies, asset property type, catchment area, etc. Almost. And if you have missed it, person who sent this question, if you have missed it, you can look at the presentation, which will be available on the website of MCT and SIAS. So most of them keep coming back on Singapore assets concentration. You have already explained a few times. You must be getting tired explaining why you're moving out of Singapore. That's all right.
Never tired.
Never tired. You see, especially given the MNACT's DPU long-term growth has been significantly lower than that of MCT's. So they were thinking they prefer you stay in Singapore. For investors looking for growth, why not offer them access to real estate funds managed by Mapletree?
Maybe I answer that.
Yes.
Maybe if you ask the sponsor directly, maybe there's something that we can consider as a separate listed entity if now we can convince the authorities to let us do so.
Yes. So there's something like the capital and investment, capital investment.
The capital management. I think what the investors probably ask for the retail investors to have access to what we have put into our private equity funds, which is not an illogical thing to get a bit of the so-called exposure to what we do as a group. But no, I don't think it should be under this MPACT entity.
Okay, can be a separate one. Please sleep on it, and you can tell them at the
Yeah.
age what you have in mind.
We
Next
need to
year.
pick some brains to see how to put up that product.
Yes, yes. You have a brilliant CEO there. Would you have done this transaction if this was not a related party transaction?
Yes. Yes, I would. I would say that we always assess deals regardless of owners. Okay. Whether we'll always look at the asset itself, we look at the financial positives of the deal, we dig into the leases, we look at the risk profile, we look at what we can gain in the long haul, we look at the price per square foot that we're buying in. So it's a array of factors. We don't look at the owner. We look at the asset. At the end of the day, what are we buying into? We're buying into the asset. Okay. But for MPACT, the positive is, by the way, it so happened to be owned by Mapletree. So we're under the same umbrella. That's where integration integration of the people and the system and processes will be even easier. So that is a plus, but it's not a hard criteria for MCT in evaluating any deals. So we are open to all third-party deals also. Yeah.
Sharon, would you like to give your closing remarks?
Okay, I think this slide actually sums up what's the rationale. We did not differ from what we say from December and March and even now. It's a very transformative one. It's a combination of strength and growth. Put together two very credible REITs to look at reaping the benefits that is listed below. It will be a very significant REIT that is a proxy to key gateway markets. MNACT actually provides us a ready platform for us to be able to swiftly move into the markets with decent assets, anchored by a very high quality diversified portfolio. We'll leapfrog into top 10. Growth-wise, more flexibility, bigger balance sheet, so that we can move better in all the markets that we are in. All these are future plans. If you look at immediately, what does MCT unit holders can look forward to? It's a positive in terms of DPU and NAV accretion on a pro forma basis. And of course, we are thankful with all the strong support. Actually, it's very material. Without the sponsor, I won't be able to come up with 2.2 billion of cash. It's an investment for them. It shows a lot of conviction. We also took the chance to waive asset acquisition fee and also to change fund management fee, which is the base and performance, to be more aligned to unit holders at the expense of the sponsor. Okay,
Better growth and better DPU, better growth and better DPU can be expected.
That is what we are looking forward to.
Yes.
Yes.
Thank you. That's on a positive note. We end this tonight's dialogue session. Thank you to both of you, Sharon and Teo Chai, for taking the time yes.
Yeah. And to all unit holders, I think our platform is still open for any queries that you may have. Feel free to drop us a line. We'll definitely get back to you on any queries that you may have. We try to make it as interactive. There are avenues open for you to address any concerns, or you may want more details, so that you can make an informed voting decision way before the deadline on the 20, which is on the EGM on the 23rd. Yeah. So feel free to drop us a line. We'll be happy to receive feedback and even queries. Yeah.
I wish you and
David
all the best. Thank you very much. Right.
Thank you, David, SIS, and all investors who dial in.
Thank you very much.
Thank you, unit holders. Bye.